Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 27th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also find at the bottom of those emails which stocks are giving you overbought and oversold cluster signals within the S&P 500. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. At Brandon Van Zee is my handle. Of course, these days you might refer to it as X as opposed to Twitter. Whatever the current verbiage is or descriptor, we do certainly appreciate those of you that interact with us on that platform. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as we get started here, just a quick heads up, this will be one of the shorter 15-minute versions of the video because we weren't able to quite get to 100 likes. Somebody had asked me before, where can you actually see the like count? For those of you that are watching the video on our website at MarketScholars.com, remember underneath where you're watching the video is where you see a Twitter widget and a Facebook widget. The Twitter widget, you can see directly on our website what the like count is right now, for those of you that are curious how close we're getting to 100 likes. So if 8 more of you would have stepped up to click like, this would have been an hour-long video today, but I'll keep my promise to those of you that prefer the shorter videos, and we'll make sure that we get this one done in about 15 minutes here today. But for next time around, if you want me to do a full-length video on Tuesday, when I'm next scheduled to do it, make sure you're doing your part by taking the 5 seconds out of your day to click like for us there. Now, while we're over here on the internet, I wanted to once again come over here to the FinViz website. This is a heat map that they put together. Many of you know that for quite some time I've been sharing with you the heat map that is kind of embedded within the Thinkorswim platform. But after I've kind of spent a little bit more time with this FinViz heat map here, I think it's actually better in a lot of ways. It's just a matter of whether I remember to bring it up or not during these videos, because old habits do die hard, and I've been looking at the one on the Thinkorswim platform for so long that sometimes it just escapes me. But we talked about this quite a bit in my question and answer session today. So for those of you that are looking for additional content from me, remember I did teach a 3.5-hour class here today, and I'll do my best to make sure I include the link to that class in the write-up of tonight's video. So that way, for those of you that were hoping to get more time out of me here today, you'll have 3.5 more hours if you're a premium member of Market Scholars already. But we spent some time talking about this heat map in my Q&A class today, because it really gives you some nice features over on the left-hand side here. Traditionally, what I show you guys in this free YouTube video here is just what is the one-day performance. But you'll notice that there's this drop-down off to the left on FinViz that allows you to see information on the heat map that greatly advances what is available on the Thinkorswim platform. On the Thinkorswim platform, we're usually just looking at one day, but you can see here on FinViz, you can look at 1 week, 1 month, 3 months, 6 months, 1 year, year to date, and then you can even get into some of these different fundamental characteristics. PE ratios, forward PE ratios, price to book ratios, dividend yield. Some of you might have seen that I posted a screenshot of the dividend yield heat map on Twitter earlier today, or X, whatever you call it. And things like earnings per share growth rates. So anyway, shout out to FinViz and the developers over there. This is a pretty interesting tool that they've put together, and I appreciate the extra effort that they're putting in for us over there. So if you ever wanted to see the dividend yields or the forward PE ratios, we looked at the PEG ratios earlier today in class. This one would maybe be an interesting one with the growth rates of the last 5 years to see, where the earnings are growing the fastest. So a lot of different ways to kind of look at this information as opposed to just the dry table format that you might find elsewhere on the internet. One thing that I was doing here just a moment ago is looking at these different time periods and seeing the differences there, because remember, money does rotate, and when it does, we should be able to pick up upon that. And of course, we use things like my sector selector tool and factor selector to help us understand those rotations. But this would also be an effective way to kind of keep your eye on that situation. So for instance, if I look at the 3-month performance of the S&P 500, notice all the really bright green we have kind of in the upper left-hand portion. Of course, that's where you're going to have your Magnificent Seven for the most part. Apple up 18% over the last 3 months. Nvidia up 70% in 3 months. Alphabet up 24%. Amazon 22%. Tesla up 66%. Microsoft up 12%. Those are some really massive moves. And I didn't even mention Meta. Of course, Meta was one of the stars of today. It's up 48% in 3 months. So that's probably what catches my eye. Notice as an opposite of that, notice the utilities down below here in the last 3 months are mostly red. Now, if we change that from 3 months to 1 month, notice there is a difference. First of all, notice that in the upper left, it's not nearly as bright green as the 3-month view of it. In fact, Microsoft is actually down in the last month. Now, that's largely due to their poor response to earnings the other day. Nonetheless, it is kind of interesting to note that in the last month, while we've been hitting 52-week highs in the S&P 500, Microsoft's actually down 1%. Amazon is actually down a little bit over that time period as well. The rest of the Magnificent Seven appears to be higher, but it is not nearly as dramatic as the 3-month would tell us. And then look at some of these other areas like the utilities. The utilities are up in the last month, even though they're down in the last 3 months. So, you can sense that there's a little bit of rotation happening there. It's not a huge deal, but some money may be moving from the Microsofts of the world into, I don't know, the Duke Energies of the world or what have you, right, over the last month or so. And then if we kind of zoom in even further to the 1 week performance, there it changes even more dramatically. Here we have not just less green in the upper left, now it's bright red in the terms of Microsoft in the last week, whereas over here on the right hand side you're seeing more green in, let's say, the energy patch. And then now zooming into the kind of the 1 day more traditional approach that I share with you guys during these presentations, you can see what today looked like. Today was a very interesting day in the market. It's too bad we don't have an opportunity to spend a little bit more time diving in deep here in the video tonight. But what I will say is that it started with a bang to the upside, and there was a lot of pent-up enthusiasm when the market started here this morning, largely on the back of Meta. Meta reported blowout numbers with their earnings yesterday afternoon, and the stock erupted higher to new 52-week highs. You can see that it didn't quite close as aggressively. It was still up 4.4%, which is a nice day for such a large-sized company, but earlier in the session it was up like high single digits, 8-9%, that sort of thing. So the market was really excited with that out of the gate, and then as the day went along, things really started fizzling, and you can see that by the end of the day, we actually closed much lower, with the vast majority of companies closing in the red here today. Tesla stands out, down 3% today. Microsoft couldn't get out of its own way, down another 2% there as well. So what could have been a stellar day turned into quite the fizzle, which ended up leading us to a bunch of bearish engulfing candles. We'll take a look at that here in just a moment. But it's kind of a bit of a letdown for those of you that have been watching the Dow win streak that we've had here recently. That did officially end today. The Dow Jones Industrial Average, for those of you that didn't hear it, had 13 days in a row to the upside. And in this past century, that had only happened one other time. It just so happened in the year 1987, which will always be remembered for its massive stock market crash. But there was one other streak that, if you go back way back in the research, if you go back to the 1800s, back in 1897, there was a 14-day win streak for the Dow. So today ended the second longest streak in history, or at least tied with it, with the 1987 run. So quite a impressive move there for the blue chips. In terms of other big movers today outside of the Magnificent Seven, it's worth noting that Comcast had a very nice day. It was up about 6% here today. That was one of your leading stocks. AbbVie, a dividend aristocrat, was up about 4% here today, so nice day out of them as well. The cruise ships have been cruising nicely here lately. Royal Caribbean was up 9% here today, and Carnival was up 3%, NCLH was also up nicely, 2.7%. So the cruise ships seem to be kind of one of those areas that's clicking nicely here lately. On a big down day for the market, it's a little bit surprising that the semiconductors actually performed pretty well today. Usually they're kind of hypercharged from a beta perspective, either aggressively up or aggressively down, depending upon the direction of the overall market. Today we had a pretty bad sell-off in the overall market, yet the semiconductors were mostly higher here. So kudos to them, because that's not what I would have necessarily expected. On the downside, there's a lot to report there. SPGI was down 7%. Some of the healthcare companies like Bristol Myers were down 4%. Pfizer was down nearly 3% today. Honeywell took it on the chin. It was down over 5%. LHX, one of the defense contracting companies, was down 6%. So there's also Chipotle, for those of you that enjoy your burritos every so often, down nearly 10% here today. So there were a lot of aggressive sell-offs here, and not all that many big movers to the upside. Let's take a look at the specific numbers now. Over on the thinkorswim platform, you can see that just 121 stocks managed to close higher in the S&P 500 today. That was good for about 24% of the index. So about 3/4 of the stocks in the market did close in the red today after what appeared to be a bullish day at the start of the session. Here's what the candles look like now. And as you can see, the S&P 500 did close lower by 0.64%. Not a huge day. I think the more dramatic action is the fact that it kind of gapped up to start the day and then ended near the lows of the day. So the 0.64, remember, is from yesterday's close. It doesn't fully tell the whole story there. And you'll notice they were not alone. Pretty much all 4 of these candles in the 4 different charts look the same today, basically starting the day with a gap up and then closing near the lows of the session. And all of them, if you look at the body of the candles on all 4 of those charts, are shaded red or colored in red, basically giving us that gap up, close lower impression, and then is doing what's known as a bearish engulfing type of a view. So today's body is engulfing the prior day's body on all 4 of these charts. That's generally speaking not a positive sign. You do need to see a little bit of follow through and confirm that the next day. So if tomorrow we completely reverse course, I think we get our PCE numbers, perhaps we completely eliminate what sort of damage was done on the charts today. But if tomorrow accelerates today's gains, then it will be viewed that today was a very important day in the markets. Again, we've got to be careful reading too much into it, because it is also true that all 4 of our charts remain well above their rising 30-day moving averages, and we all have to recognize that stocks don't just simply grow to the sky. So there are give-back days along the way in the midst of long uptrends. Today could very well be just one of those situations once again. I remember here recently we were talking about some bullish intermediate confirmation signals, and those do exist for the most part again today. Notice the green line is still in the upper reversal zone on the S&P 500 on a day when we've got the red line in the lower reversal zone. We even have the blue line where we kind of like to see it between the 50th and the 20th percentile. So that is a bullish intermediate confirmation signal. We also have the same signal existing on the Dow Jones Industrial Average, which was down 0.67% today, again ending what had been a 13-day win streak, the first time since 1987. But they did end with a bullish intermediate confirmation signal, and the Russell 2000 also ended with a bullish intermediate confirmation signal. So that means that the NASDAQ is the only one that did not, and it's only because the green line has fallen out of the upper reversal zone and is now pointing lower between 80 and 20. Remember, that actually happened 2 days ago, which is a little bit surprising at that time, but since then we've had 2 sell-off days, so maybe it was appropriate that the posture did change from an intermediate perspective on that day. Again, still above that rising moving average. We don't want to necessarily throw it under the bus too quickly, because people who have done that so far this year have been proven incorrect. But it is at least worth noting that the NASDAQ NASDAQ seems to be giving us some stalling out features here, perhaps due to the bearishness or the selling that's been taking place more recently in Microsoft. So 3 out of these 4 charts did end with bullish intermediate confirmation signals. All 4 of the charts have bearish engulfing candles as of today. The NASDAQ is the only one that has a weekly bearish intermediate posture here at the moment. The Dow ended its 13-day win streak. The S&P 500, as I mentioned before, down 0.64% today. Dow, similar, down 0.67% today. The 2 bottom charts, the NASDAQ shows a loss of 0.55%. That really wasn't that bad. And again, I think the semiconductors really helped the NASDAQ kind of have some semblance of strength there today. And then the Russell 2000 was the worst performer today, down 1.29%. So that'll wrap it up. That's our 15 minutes. Appreciate you checking out tonight's video. Remember, David's still on vacation. I'll be back with you in this free format on Tuesday. I'll be back with all my premium members in our classes on Monday. If you want me to do an hour-long video for you next time on Tuesday, make sure you take the 5 seconds out of your day to click like for me there on Twitter. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.